Hi my dear students, in the previous class we discussed about the format of cash flow statement. So I think you all studied the format very carefully and clearly. The three activities we mentioned: operating activity, investing activity and financing activity. And in this class we are going to discuss about how to calculate cash flow from operating activities. Okay, so one example we can take: compute cash flow from operating activities from the following information. Okay, so some information is given. So here particulars, 2-year amount column also given, 2016 31st March and 31st March 2017. Here surplus balance as per statement of profit and loss. So here first year it was 1,20,000, second year it is 2 lakhs. Proposed dividend is 2 year given. Provision for tax 2 year given. Trade receivable, it is a current asset. Outstanding rent, it is a current liability. Goodwill, we know it is intangible asset. Prepaid insurance, it is a current asset. Trade payable, current liability. And one more information given: depreciation during the year. This year depreciation of fixed asset is given 15,000. So this much information given, we have to calculate for cash flow from operating activities. You remember the format? So from this, if you need to calculate cash flow from operating activity, we need first net profit before tax. So first we have to calculate net profit before tax. So calculation of net profit before tax. See, in this question, surplus balance as per statement of profit and loss is given. So as per the balance sheet, first year the profit and loss balance was 1,20,000. Second year it is 2017, it is 2 lakh. That means this year profit after tax, how will calculate this second year, that is 2 lakh minus 1,20,000. So 1,20,000 in 2016 become 2 lakhs, means this year profit after tax is 80,000. So 2 lakh minus 1,20,000, we will get 80,000 is the this year profit. Okay, so difference between statement of profit and loss, surplus balance as per statement of profit and loss account, difference you have to take. If it is increasing, it is profit. If it is decreasing, it is loss. That you already studied. Here you can see it is 2016 it is 1,20,000, 2017 it is 2 lakhs. So it is increasing. That means it is net profit. So this is net profit after tax. So first we will write net profit after tax, that is 80,000. We know that if you want to calculate net profit before tax, some items we have to add to the net profit after tax. That already we studied: provision, proposed dividend during current year, provision for tax of current year, transfer to general reserve. These items usually we have to add. In this question we can see whatever is there. See, proposed dividend is there. Last year it was 30,000. This year it is 50,000. No additional information is given about proposed dividend. You will add current year proposed dividend, which is given here. 2017 is the current year. 2016 is the previous year. So 50,000 is the proposed dividend current year, that we have to add. So add proposed dividend of current year, that is 50,000. Then we can see one more item is given: provision for tax. Provision for tax also 2 year. Previous year it is 10,000. Current year it is 20,000. So this amount only this year profit and loss account we showed. So that much net profit decrease. So this amount only we have to add to calculate net profit before tax. So provision for tax also current year we have to take. If 2 year information given, we have to take the current year, not the previous year, if no additional information is given. Okay, so here we have to take the current year, that is 20,000. So provision for add a provision for tax of current year 20,000. Here general reserve not there. So when you adding profit to the profit after tax 80,000, proposed dividend and provision for tax, we will get a net profit before tax, that is 1,50,000. So first we calculated which one? Net profit before tax, we got a 1,50,000. So after getting net profit before tax, we know format, you remember, we have to calculate cash flow from operating activities. So heading we have to write cash flow from operating activities. First item, we know indirect method, first we have to write net profit before tax. That we calculated just now, how much it was? 1,50,000. So you remember the format. To the net profit before tax, we have to add first non-cash and non-operating expense. Any non-cash or non-operating expense is there, we have to add. You remember which are the non-cash expenses? Depreciation and amortization is a non-cash. Non-operating expense, example, dividend paid, interest paid, this all of loss on sale of fixed asset is all are non-operating expense. In this question, only one item only, depreciation. Depreciation only given as a non-cash expense. So depreciation we have to add, okay, as a non-cash expense. How much it is? 15,000. Here you can see goodwill is given, but goodwill value first year it was 76,000, second year 80,000. It is increasing. Goodwill is a intangible asset. It is a fixed asset. Increasing, it will come in investing activity. It will not come in operating activity. If it is decreasing, then it will be amortization. Then it will come in operating activity. We will add because it is a non-cash expense. Okay. Now, when you adding this 15,000 depreciation, we will get a 1,65,000. In this question, non-operating incomes are there to less. So that is why what result you getting is operating profit before working capital changes. So add non-cash and non-operating expense, here depreciation only. Non-operating incomes not there in the question. No income is there. That's why no need to less. Then what you getting is operating profit before working capital changes, that is 1,65,000. Now we know after getting operating profit before working capital changes, current asset and current liability we have to adjust. You know, any current asset decrease you have to add, current liabilities increase you have to add. Current asset increase or current liability decrease you have to less. In this question you can see trade receivable is a current asset. First year it was 62,000, second year 50,000, it is decreasing 12,000. That's why trade receivable, we have added trade receivable decrease 12,000 we have to add. So current asset decrease we have to add. Then in the question you can see outstanding rent. First year it was 42,000, second year 24,000, we can see it is decrease. Outstanding rent is a current liability decrease we have to less. So here you can see outstanding rent decrease 18,000 we have to less. Whenever less we have to put in bracket. Then next asset you can see prepaid insurance. Prepaid insurance is a current asset. 4,000 become 8,000. It means increase. Current asset increase you have to less. So here prepaid insurance increase 4,000 rupees we have to less. Then one more current liability is there, trade payable. Trade payable first year 38,000, second year it become 26,000. So that means it is decreased. It is current liability. Current liability decrease you have to less. So trade payable decrease 12,000 we have to less. So from this operating profit before working capital changes, current asset and current liability we have to adjust. This 12,000 we have to add. This all amount you have to minus. When we will get a 1,43,000. It is known as cash generated from operation. Okay. So cash generated from operation 1,43,000. So from the in the format, after getting cash generated from operation, income tax paid we have to minus. This year how much tax paid you have to minus. In the question you see provision for tax. Last year it was 10,000. This year it is 20,000. Remember in the question adjustment nothing mentioned. Last year provision we will pay this year. Okay. last year provision for tax is 10,000. So tax paid this year is 10,000. So last year provision we will pay this year. Proposed dividend also same way. Last year proposed dividend we will pay this year. So dividend paid is this year how much? 30,000. So remember, provision for tax of last year will be the tax paid of the current year. So this year tax paid is how much? 10,000. So here we have to write income tax paid this year 10,000. That we have to minus 1,43,000 minus 10,000, 1,33,000. So this is positive. The amount is positive. Then we will write cash inflow from operating activities. If you get a negative, you can write cash used in operating activities. Okay, so answer you got from cash flow from operating activities is 1,33,000. So practice this kind of one question. Okay, thank you so much.